I just wanted to give you an overview of what I can do for you to help you assess different investment properties and see if it's the right decision for you to build your portfolio. So here's an example of the purchase price and the future value. So let's say we buy something and you think it's going to go up in value because there's immediate repairs needed. We put more repairs in than the initial we have here, then we could bring this value up here and reflect that in the calculations. This is based on a loan, 20% down, an investment loan rate of 4.25, and then annual appreciation. We can adjust that. National average is 3.5%, and we go through all the different loan terms and all the way down. Vacancy rates and everything are factored in, property taxes, insurance. If you're going to manage the property yourself versus paying a management company, and then depreciation, tax rates, recapture rates when you sell it on depreciation, everything like that, just kind of standard. Obviously, you need to talk to your CPA and financial advisor to make sure this meets current standards for you, but this is just a general guideline. So in the next page, it brings you to the summary of the findings. So it shows you, we did a 10-year overlook here, an effective gross income, operating expenses, and it brings you your NOI. And you can see the difference in how that changes and goes down to cash flow before taxes. So you have your net operating income, then your principal, loan, and interest, initial improvements here, and then your tax flow. And that goes up as we have the appreciation here. NOI, and then you would take off your expenses, your interest that you can write off, and depreciation. You can actually write off the taxes too, that's not factored in here. So it'd be a little bit more here for the tax benefit. And then it shows you what your loan reductions would be, property value based on the cap rate. So this can change. So right here on the first page, if we think, it's just an average area, it's going to do the 3.5%, we can do that. See, we have the findings here. So based on the cap rate. So we have year 1 to year 2 is 228, right? So if we think, well, we're in a hot area, it's probably going to go up more than that. Again, and nobody knows the future, but all we can do is, I can show you here in a minute how we can look at that differently. Okay, so year 2 was 244, and it went up to the 248, so it's a little bit more than it had been. It had it at 93,000, now we're up to 126. Annual return on initial capital, so you can see cash flow before taxes, your tax benefit, total principal reduction, and then your appreciation that we figured. And then your initial on return on initial investment here goes up. And then based on your initial cash and the improvements, here's your percentage return on initial cash. So that's looking at it on initial cash, and then here's your return on total equity. So as your equity grows, the return is going to go down. And then estimated sales proceeds. So this brings in all your capital improvements, sales cost, to sell it, recapturing depreciation, sales price, and then capital gain, what you would be left with for capital gains over the years, and then what that tax would be based on the 15%. Obviously that can change, and then if they change tax guidelines, and then this factors in sales price, ending loan balance, proceeds, and estimated proceeds after taxes and everything, what you would be looking at with that investment. So this breaks it down into the other tabs, so you can just kind of see how the taxable income is figured, all the breakdowns, the cash flow, and then the loan information and the payouts. Now on the first page, like I talked about, the estimated annual appreciation. National average is 3.5% appreciation year over year, and Hillsborough County fell right into that. But we can compare that here. So here's a different zip code, 33614. So they were up 8.3% versus Hillsborough County. So we could kind of look in here, just kind of see what that zip code is doing in general. And here's another one, 14.7%. So if we get into the areas where you think that there's a lot of change going on, up and coming, we can definitely make those changes, and it would definitely reflect on that sheet. So this is another tool that I use that I have. So if you put in its Neighborhood Scout, put in a zip code, it brings down all the neighborhoods. Okay, so let's say you're specifically looking at a property in what area, and you want to really drill down in that area and see what's going on. And then the color codes are highest price communities, lower price communities. It shades it differently. So I had this, so if you click on here, for example, on one of the properties, it's going to want you to unlock that report, and it's not going to show you everything. So it has overview, real estate demographics, crime, schools, and trends and forecast. An example of what I have here is one that I had unlocked, but I have the PDF saved, so I could show that to you when it shows everything. But basically, your essential overview, the real estate, kind of what's going on, real estate taxes, gives you your your monthly rental rates and different things like that. You can check this out in more detail, lifestyle. What's interesting is what gives you the trends and demographics. So it gives you a rating for an index, so appreciation potential of what they think, and then past appreciation and existing fundamentals. Gives you all this information here. Key price drivers, so pros and cons, like being close to jobs, farther from jobs, everything like that, in all these reports. So it's kind of interesting, so you can kind of get an insight to say, where are people moving, why are they moving there, and this company does that. Now, they don't even take into consideration exactly everything we have going on in Tampa, all the different construction and projects. So if we know that on top of everything that we do in the research in this, we can obviously, like I said, make those adjustments. So I just wanted to kind of show you this is how I would go about starting to figure out what kind of portfolio worked for you, what worked best for you, and looking at the numbers.